How's it going, everyone? Matt Leighton. Welcome back to another real estate video. Today we have a Fannie Mae update for you. 2017, big stuff happening that I don't know as much as Sean Glennon knows. He is the VP of Homes Savings and Trust. No, not even close.
You got it this time. It's right behind you if you need a reference.
So anyways, guys, 2017, if you're on the fence about buying a house, I get it. Rent's expensive. Are you wasting money? Maybe, probably. But there's a lot of updates going on in 2017 that maybe you're not aware of. So Sean, why don't you start us off? Let the people know, just at a broad overview, kind of what's going on recently.
Yeah, I won't bore you guys with how the sausage is made or getting into specific underwriting guidelines, but the message is that, well, we went through a mortgage crisis about 10 years ago in which underwriting guidelines were much too loose and people were getting loans that didn't really deserve them or wasn't a good business decision to be giving them to them. So the pendulum swung very hard the other way and underwriting guidelines became much more difficult to qualify for a loan and maybe swung a little too far. But that's what happens when you go through periods like that. Mm-hmm. What's happening right now is, I don't want to say the pendulum swinging back in the other direction, but it's starting to loosen up.
Correct itself a little bit.
A little bit, yeah. So we've gone through a 8-9 year period where loans have performed very well, and so they're seeing if they can ease up guidelines a little bit. So the message to take away from this is Fannie Mae has actually rolled out a brand new set of underwriting guidelines that do make it a little bit easier and do allow for borrowers who may have had a lot of student loan debt, may have been bogged down by alimony debt, maybe starting a new job before you would have to waited to start that new job. Now, as long as you're within 90 days and have an employment letter, you can start. Debt to income ratios, that's what really drives what you can qualify for. They've loosened up how high you can go in that. Yeah. So if you've been in a position before where you've thought about buying a house or even gone down the road of getting pre-approved, and due to debt, due to debt to income ratios, due to moving jobs, if any of those reasons held you back or didn't allow you to qualify for as much as you were hoping to be qualified for, it might be time to give my man Matt a call and myself to see if your situation has vastly improved. Yeah, and these types of things are affecting a lot of people. So debt to income is probably the first thing out there. High debt, alimony, it's not some niche product where a couple lenders got together and they have this new program. It's like, hey, DTI, if that changes, then a whole bunch of people can become eligible for a loan that maybe you didn't think you were eligible for in the first place. You bring up some great points. My question is, how do people even find out about these updates? Because the clients I work with, they have 4 apps that show different houses that all have the same data on their phone. They have Redfin, they have Zillow, they have HomeSnap. I'm guessing they don't have 4 mortgage applications. I'm guessing they don't go to fanniemae.com, right, to find out the latest news. So if you want to learn more about the latest guidelines, how do we find out about these things? Like you said, I don't know if a Fannie Mae underwriting guideline app would really be a bestseller in the App Store. There really probably is, you're not going to see it probably on the front headlines of CNN or Fox News or anything like that. So I would just encourage you to give myself a call or whatever lender you're working with. We keep talking about all these terms, debt to income ratio. That's determining your income versus your current debt, and that percentage drives what your purchasing power is. So now all of a sudden, if they're allowing you to go higher in your debt to income ratios, and they're looking at debt differently, student loan debt and alimony specifically, all of a sudden your window for what you can allow for your mortgage payments become much bigger. So again, I would really strongly encourage anyone who has gone down this road and maybe not been pleased with the outcome of what they were approved for to reevaluate your options, because it may have greatly improved. Yeah, and for those that have been watching my videos, I'm a big proponent of buying property when it's right for you, not buying property because of who the president is, not buying property because of interest rates. However, if there is a significant enough shift where on the bottom line it makes sense to go ahead and move forward, and you're going to be living in the same place for the next 7 years,
that might be worth a 5-minute conversation with the lender that you were in touch with 3 years ago, when you had the better job or when you had less debt. So it's not something where you need to buy right now. It's something that we're trying to say, hey, things have changed since you last spoke with your lender. It might be worth it to pick up the phone and have a conversation.
Well put. Well put.
So with that being said, hope this was a quick hitter overview, Fannie Mae update 2017. I'll list and link Sean's contact information in the description below. Thank you very much for watching. Until next time, create a productive day. Take care.